Good afternoon, traders. Welcome to the Moor Analytics Afternoon Energy Podcast for July 2nd, going into the July 6th. Going to start off with the natural gas. Okay, we've been bullish since break above 276.90. We've seen 627.6 to the upside. A lot of other bullish calls in here. Those are all on hold. And the trade below 333.20 warranted decent pressure. We've seen 173 ticks so far. And the trade below 328 brought in pressure down to 315.10. Decent trade above 329. Minus 0.4 of a tick per hour starting at 6 o'clock p.m. will warrant of decent pressure. A decent penetration on the electronic contracts through Sunday is going to be 34 ticks. And decent break below 310.10 plus 0.1 of a tick per hour will warrant decent pressure. The crude oil still dribbling lower here. The trade below 114.35. It's brought in pressure down to 67.04. I would caution two things here. First of all, we held a macro exhaustion level here at 67.35, but we also broke below this line decently. If we break back above that line decently, that'll warrant a decent strength. That line's going to come in at 67.96. Minus 1.3 per hour starting at 6 o'clock p.m. A decent penetration. There's going to be 78 ticks over the weekend. I would caution that this general area is the final exhaustion level for the entire move up from 55.40 to the highs and pulling back down. The actual exhaustion area is at 64.97, but it's actually the areas from 65.42 down to 64.24. A maintained gap higher on Monday will leave a minor bullish reversal below, which would be ideally situated. The RBOB rolled over and rejected out of the gap down below. The trade below 352.26 brought in 76.61 cents of pressure. A lot of other bearish calls in here. Those are all on hold. Then the trade above 287.06 warranted decent strength. We saw 9.5 cents up into here before rejecting off this line. Decent trade above that line is going to warrant a decent strength, likely for days. That line is going to come in at 295.55 plus 0.6 of a tick per hour starting at 6 o'clock p.m. A decent penetration is going to be 256 ticks up until the Monday open. A maintained gap lower on Monday will leave a minor bearish reversal above. I would caution, though, that even though if we break above this line, it'll warrant a higher trade for days. At the same time, we'll likely be in the last stretch of this move up from here on a lower time frame, and you'll have to be aware of possible exhaustion at 298.20 to 299.10, and then above that at 302.83 to 306.05. If we took out the first level, which is probably most likely, and head up to the second level, this would be an ideal place to sell against initially anyway, because we have this line coming down above, which is going to come in at 302.82 and then decrease 2 per hour starting at 6 o'clock p.m. Decent break above that line will warn of continued strength, although we'd like to see a rejection off of the line of at least 136 ticks before breaking above it for better form. If we break above this line decently and back down through it decently, that would be, I would get short and look for decent pressure. The heating oil, we held exhaustion with a 46.1290 high and rolled over $1.61.16. A lot of other bearish calls in here. Then the trade above 320.04 projected this upward 6.75 cents minimum, 25 cents plus maximum. We attained 10.75 up in here before rolling over. Now we have not negated this formation, but we did break below this formation, which I said get short at a decent penetration below 320.77 plus 11 per hour. That does have this bearish. We saw pressure down to 315.13. A decent trade back above that line will warrant a decent strength. Again, that's going to come in at 321.89 plus 11 per hour starting at 6 o'clock p.m. And decent trade above 326.63 minus 11 per hour starting at 6 o'clock p.m. That'll warrant a decent strength. And in the Brent, the trade below 113.13 brought in pressure down to 70.14. I would caution that we do have a main area of exhaustion down below here from 69.38 to 67.80. This would be the final area of exhaustion, similar to the one I'd spoken about in crude. We also have this breakout line that would be coming in right in the middle in the lower part of that anyway, which is going to come in at 68.24 minus 7 per hour starting at 6 o'clock p.m. If we break below that decently, it's going to warrant decent pressure, and that could bring in or usher in pressure down towards 58.83 in the days ahead. If we break below that decently and back up through it decently, look for decent short covering to come in. A maintained gap higher on Monday will leave a minor bullish reversal below. And so the gas oil is really something you want to keep an eye on. We left a medium bullish reversal below 2 days ago and rolled over and rejected out of this gap. The maintained gap lower in there on Monday will negate that medium bearish reversal above and leave a minor bearish reversal. It will negate that medium bullish reversal below and leave a minor bearish reversal above, which will warrant pressure likely right back down to test the 884, 840 even low. The gas oil, the failure low 1340.75 brought in 488.25 pressure. A lot of other bearish calls in here. Those are all on hold. Then the break above 896.59 projects this upward 19 minimum, 60 plus maximum. We've seen 41.66 of that so far. That was a break above here, rallying up to here before rolling over and bouncing off it again. Decent failure back below where that line is going to come in at 893.07 minus 5 per hour starting at 6 o'clock p.m. will warn of decent pressure. A decent penetration. A decent penetration in there is going to be 9.8 through Monday's open. And the cadence going into Monday is going to be the heating oil is the weakest of the three, the RBOB in the middle, and the crude the strongest of the three relative to one another. I would note that if the heating oil crack leaves a maintained gap lower on Monday, that'll leave a minor bearish reversal above. If the RBOB crack leaves a maintained gap lower on Monday, that'll leave a minor bearish reversal above. If the RBOB to heat spread leaves a bullish gap higher on Monday, that'll leave a medium bullish reversal below. Okay, thank you for watching. There will be no analysis tomorrow for those of you that are not in the United States, as we're celebrating 4th of July weekend. For those of you that are in the United States, hope you have an awesome 4th, and I will see you on the next podcast.